Good morning, YouTube. Today I'm going to take you on just kind of a refresher of some of the money moves and updates. I gave you one in February um, where we talked about what things I was looking at, and now I've got some of those done, and I want to give you some results and what I ended up doing. So let's just get right into this. So today, March 23rd, crypto. I was looking at staking Solana, and I was looking at Jito Sol as a second component to the return on regular Sol, and maybe getting a 7.3% return. We're going to skip over to looking at the returns. So I actually staked the Solana. I staked it here, which is through a Ledger device with the Phantom in front of it, and here directly with the Phantom wallet on my laptop. And so two different computers I have it staked from. These are the validators that I decided on using: Chain Node Tech, Majestic Soul, Spectrum Stakem, Helios, and Marinade has a kind of a different one, but you can native stake with them also. And those returns are 8.93% across those different nodes on average. And so we're going to change this to 8.93% and mark it as complete. There's the amount of SOL that I have there, and I think the amount I have, I would like a little bit more, maybe about 20% more, so that I get certain SOL per month. ETH staking research I've been working on. I still just have that staked on Coinbase. The problem I have with ETH staking is you don't control the keys, and once you put those keys on an exchange, then you introduce an exchange risk. And so right now I have them sitting on Coinbase, and I feel like Coinbase is the lowest exchange risk, or one of the lowest exchange risks, and I'm trying to figure out how to either go to high return or lower exchange risk on that ETH investment, and I'm not sure exactly how that is. So that's something I'm still working on figuring out. Learning and testing, staking ETH, which is above. I have bought some Home Depot and some Walmart stock as it's been down. Some of the Home Depot I bought when it was really low, and then it popped up like $7, and I sold all of it, but like the one share. Kept that for the profit on a few of those. I don't recommend doing that, but that's what I ended up doing a little bit. And Pepsi and Coke, I sold my Coke, and Pepsi is now one of the holdings I have, which I have increased over the time that before this whole market thing happened. Pepsi was actually low, down to 142. I increased my holdings on that, and so this is the way I see it. Increase on Pepsi. Home Depot, I have the amount that I want, and so I probably will be pair, and I think that's the right word, but it basically means that I have a little more than I'd want to have, and so as if it goes way up, I might pair it a little bit. Ally is increased a little. I have a good amount of Ally stock, and Walmart. I probably will increase a little bit of that, but it's more of a shift between accounts because I have some coming out of one account that I need to sell over time a little bit. Shift between accounts, and I'm not sure what I will do there about is the amount. I like to hold about a little less Walmart than I do Home Depot, and a little less Ally and Pepsi than I do Home Depot also. And lastly is VIG, which is an index fund. This is really the one. This is the first holding I really had and would have again, because it's a conglomerate of a bunch of different stocks that pay dividends. So it doesn't go down as much or up as much as the market does. And I'm probably going to increase that over time. If we get a big market correction where the market just crashes and everybody's, there's wailing and gnashing of teeth, I will probably buy more VIG at that point. Wait till it comes up some, and then go forward. Shoes, I did increase purchasing, and I have a sales increase right now this month. I think this month from last month is about 147% increase in sales, which part of it is because I ran a sale and there's more visibility. So, probably not going to last, but that bump in profits really helps with cash flow. Closeouts, this is uncertain of how we're going to do that. Work is done. I'm going to take that off the list, and this is my W-2 job. It is done. I am in the middle of all the transfers and things you have to do with accounts. The new company is not a new company anymore. It is underway. We will cover the YouTube revenue. Let me put that back. Solana's up above. We'll cover the YouTube revenue. So let's talk about the YouTube revenue. I parred my spreadsheet where it is just down to percentages. That way we don't have to talk about all of the amounts and things, and essentially you can do the exact same thing I'm doing. I don't think you should do that unless you go back to here, and let's say you have a good portion of VIG, maybe 75% of what you'd want to have. You have a couple stocks here, maybe looking at a first rental house, and you're looking at alternative investments to see what those feel like. This is how this works. Here's the channels. Here's the percents of those channels that I own, that I bought. And then as the revenue from those channels comes in, then you get paid directly using a smart contract, that percent of the revenue from the channel to your crypto wallet. The risks on that are not the crypto wallet. They're not the USDC that you get paid in. A little risk from managing your data on the Polygon network, because it takes a little bit of a technology know-how. They are working to get that as a direct payment from to a bank. Other risks are about, this channel is James Peloton, so if something happens to James Peloton, it's gone, right? Some of the upside risks are if you're making, let's say, 12% here or 11%, and it doubles. Let's say they get some good videos and it doubles, then you're making 22. 22 is huge. You've seen some returns in the range of 22 in real estate. A lot of that in real estate is based on the capital value increase, which on these, you're really not even giving yourself in these numbers credit for the capital value increase of the investment. So if this goes from 10, and let's say at 10 it's worth a 10% is worth 1,000, it goes to 20, then it should go 2,000, and that should be part of your gain, is that capital value increase or that capital decrease. So if you look up here, this one was actually a lot lower return than what I expected, and so this value is pretty much gone, very, very low, whereas this one is up 50%, and so you have to look at that. So when I look at this and what this feels like is if you go out and buy, let's say, 15 different stocks, and you hold them for 5 or 10 years, what you'll find is that one of them might be a home run, 2 or 3 might go to zero, a bunch of them sit in the middle and just stay there, and then you got some of the top end that might grow consistently. And over time, your biggest strategic decision is to sell your losers. So the ones that went down 90%, get rid of the ones you don't want to own, the ones you don't like owning, and keep the ones you want to own that've been better. Where most people's opinion is sell your winners. If you sell your winners, you end up with a portfolio of losing stocks or losing investments. If you sell your losers, you end up with a portfolio of good things. So back to here, closeouts, licensing investment. I've taken no action, but there's some things online now you can do with smart contracts where you can buy percentages of royalties of songs and things, which I think would just be cool. You can buy pieces of art under the same kind of an agreement, and I've looked at that. Not a bad thing to do, but definitely you should be in this heavy, at least 10% in your 401k, already going. Your brokerage account, automatic investment, maybe a couple stocks. Get that learning and that step in your growth gone before you get into any of these things. Other than real estate, let's say you have a portfolio of 100,000 in your brokerage account, and you have pull 25 and you put it in the real estate investment. That's not over leveraged, but maybe leverage some. That something like that might be a good move and decrease your risk overall, increase your profits also. Cost of money still 7.5. With prime flowing, we expect it to lower 0.5 this year. Hasn't happened yet. I think what Trump is working on is trying to get them to lower interest rates. We'll see how well that works. I think it'll happen next year. And I keep putting offers on houses. I just got a contract on a house in Rogers yesterday, which was a good deal. It was kind of in a neighborhood where the neighborhood is combined with 3 different neighborhoods. And due to that, realtors price them drastically different. And so if you're on the lower end, it's an opportunity for them to misprice it, which I believe they did. And so we got it in the first day it was on the market, and not a lot of people had seen it. So that's what I've been doing. Hope that helps you. And like and subscribe. Give me a comment or a question down below if you have any questions. And let me know what you'd like to see in the future. I will talk to you later. Bye.